On to our big spotlight then for this evening, and it's been 2 years since the Modi government won a landmark election. The BJP will organize over 200 events during a fortnight-long public outreach program from the 26th of May, the day the Modi government completes 2 years in office. Its lawmakers have been asked to spend more time with people, publicizing achievements. And tonight on the show, we will be discussing just that with Ajay Chhibber, visiting distinguished professor at NIPFP and visiting scholar Institute of International Economic Policy at George Washington University. Thank you so very much, Mr. Chhibber, for joining us here on The Big Picture. Interesting article you've written in the Business Standard, introducing a 3-point matrix to explain why private investment in India is not picking up. If we were to look at it, public infrastructure investment, the need for exchange rate to be competitive, and the importance of giving more credit to the private sector. If we were to use these three levers to analyze the Modi government, how would you say it has performed in the last 2 years?
So I think it's a mixed record. When Modi government came to power, we had low growth, we had declining investment, and we had pretty high inflation. But the inflation part of the story they have managed to contain, partly helped, of course, by falling commodity prices. But I think the revival in growth and recovery in investment is not there yet. And they have been somewhat slow. I mean, they've been trying to raise public infrastructure investment. They have made some attempts in both budgets, but of course, they have fiscal constraints. The big increase in private infrastructure investment has, in fact, backfired because it was started under the UPA government, but a lot of those projects had very long gestation lags and ended up getting stuck. And that, in the end, has affected the banking sector in a very significant way. And so those two factors are really what's holding up. On the exchange rate side, I would say we could be depreciated by another 10% or so, but the exchange rate policy this governor has followed is certainly better than the previous governor.
But what explains the fact, Mr. Chhibber, that since January we've seen a precipitous decline in the value of the rupee vis-a-vis the dollar? So clearly, I mean, it would suggest that exchange rate is getting more competitive. Our exports should have gotten a lot more competitive, but we've seen exports hitting an 18-month low. Not just that, but it has not even translated into higher private investment, which is what you have sort of alluded to in your paper, that every time there is a drop in when there's a depreciation in the currency, it leads to a higher private investment. We've not seen that in the last few months, at least going by the IIP data.
But I think we had a very temporary depreciation of the rupee. The rupee has again firmed up quite considerably, and the real effective exchange rate, which is what really matters, has not changed that much. Corporate investment, particularly as I mentioned in my paper, in my article, is significantly affected by the real exchange rate. And so that part of it still remains. I mean, the rupee is now at sort of 66 something. So, I mean, it had gone down to 68, had touched almost 69, but then has firmed up again. So, I don't think it's easy for investors to make decisions on small variations in the exchange rate month to month, but over the year they have to see significant real depreciation in order to be able to feel the competitiveness that will be needed to help people make these kind of long-term investment decisions.
Mr. Chhibber, you talk, of course, a lot about the need for public infrastructure investment, which crowds in private investment. But also, the risk to that, many economists would also say, is the fact that once, the government, when the deficit level rises, then there is also a tendency of crowding out private investment, because then the government and the private sector both are hankering for loans. That drives up the interest rate. So how does one really sort of strike a balance? And are you also sort of perhaps, alluding in your article that as a government, we should not be too fixated on, on this fiscal consolidation roadmap that the government has announced?
Yeah, I think we are constrained on the fiscal side. I don't think we should relax that. I think the proposal that I have made in another piece that I have written is that we should convert public equity into public infrastructure. By that I mean we have about $500 billion worth of equity in PSUs. And I would say half of that should be sold off over a 10-year period, over the next 10 years. That should be used then to draw in private investment as well into infrastructure of another $250 billion. So that is the solution to, in a fiscally constrained environment, to shift public assets. The balance sheet of the public sector should shift out of public sector companies into public infrastructure. That both those, because I have also shown that those 12 or 13 companies that the Bajpayee government privatized in roughly the year 2000, 2001, the return on assets in those companies have doubled. So I think the balance sheet of the government has to shift out of public sector companies. And as Mr. Modi said, we are going to be a government of maximum governance, minimal government, right? And the business of government is not business. So we have about $250 billion of assets that could be sold off over a 10-year period. And all of that money could then be put into railways, roads, and other ports, other important infrastructure.
You think, sir, that has been the biggest disappointing aspect that you've seen of the Modi government, especially when it comes to its privatization drive? Clearly a lot of promises were made ahead of the elections, at least, and one thought that this would probably be the most free market oriented government, perhaps in India's history. You think from that perspective, privatization has been a disappointing aspect of this, of the NDA rule?
Yes, particularly, they have been even less ambitious on that than the Bajpayee government. And the record of that period, although it was very controversial, but when you now analyze after 15 years what happened to those companies, they've all done well. So this government should have moved far more aggressively and on that front, and also it helps ease your fiscal constraint and releases the energy of the government from managing public sector companies towards genuine public infrastructure. And I think Mr. Modi, somehow I have the impression he thinks just getting better managers will fix this problem. The issue isn't better managers, because the real constraints are how do you unlock all that capital to give you much better returns. And that's where I think the Modi government has missed out quite significantly.
There's a very intriguing statistic, that's sort of buried in your article also, which basically talks about how in the 80s and the 1980s and the 1990s, India invested about 5 to 6% of the GDP in infrastructure development, whereas that number has drastically fallen. In fact, the recent high was 3.3% in 2008, 2009. What's going on over here, Mr. Chhibber? Is there somewhere the government is expecting the private sector also to come in and basically bridge and sort of meet the infrastructure goals?
Well, that's what happened in the UPA government, that they, during that time, that's when the decline took place. And then, of course, they were trying to get private investment, and partly it was because they were handing out so much money in subsidies that they ran into fiscal problems, and then the cuts took place in infrastructure spending. Then they said, okay, now let's get the private sector involved and let them. But then if the private sector is borrowing all the money, they're not bringing in new capital, they're borrowing all of it from state banks, which is the story of India. And then those projects run into problems, as they all have. Then you end up creating the infrastructure problem now has become a banking sector problem, which is now affecting the ability of the banking sector to finance genuine private company growth that we would like to see, more private investment. So, in a way, the story on infrastructure is we have seen a decline in public infrastructure, huge. And then the solution to that has actually created bigger problems for us than solve those problems. So this is what I think we need to address, and this government needs to address these issues very quickly.
Okay, Mr. Chhibber, I'm completely out of time. Just one quick last question then. As far as, the issue of NPA is concerned, how much will this new bankruptcy bill which has been passed help? Because this bill will only be prospective in nature. Nothing, it does not impact, the existing NPA crisis. Going forward, it's only for the new loans that's coming in. How much, how significant is the bill then?
Well, it's a good bill to have. And of course, a lot of regulation will have to be written, directives will have to be written around the bill, and how quickly that takes place will also be important. But yes, you're right, this bill is not going to solve this immediate problem. This immediate problem has to be tackled head-on by this government, but of course they don't have the money to be able to tackle it so easily either. That's the problem that we are facing.
Lovely chatting with you, Mr. Chhibber. Thank you so very much for taking time out and being part of this show, The Big Picture.